Hello. Today's Saturday, June 8th, 2024. I'm Jason Shapiro with Crowded Market Report. So, I had somebody this week send me a portfolio, of open positions for somebody that he follows. And, I don't know who this person is, but I thought there were a lot of interesting lessons in this. So first of all, this is the portfolio, and he gives his entry dates, and he gives his stop loss, his sizing, and his target. And when you run it, the open portfolio is down about 63%. Now, what this won't show, in fairness, is the closed positions. And we assume that the closed positions, there are profitable closed positions, so the portfolio is probably doing better than this. But that brings up an interesting point, which is that what this person is doing, apparently this person likes to highlight the fact that he has a very high win rate. But what he clearly is doing is he's closing his winning trades and calling that his win rate. And then he's keeping open his losing trades, and he's not counting that towards his win rate because it's not closed yet. And this is a very sort of amateur thought process of it's not a loss until you take it. Well, that's not true, because if you look at the value of your account, the value of your account is going to be the combination of your closed trades as well as your open trades. Go try and take money out of your account based on just your closed trades, and you'll find that it's not going to work. It is a loss, even if you haven't closed it. Okay. There's mark to market every day. And that's a horrible thought process to think, oh, I haven't closed it, so I haven't taken a loss. Wrong. It's a loss. Okay. And your money could be better spent somewhere else than sitting on your losing trades. Right. Which also gets to a point, because this was based on a portfolio value of $100,000, but the value of this total portfolio is almost $200,000. Because he's sitting on all these losers. He has some winners recently. But you wouldn't be able to have those winners on because you've already spent more than twice your money that you're sitting on these losers. So that's important point number one, I think. Important point number two is that he gives stops, but he doesn't execute those stops. Right. And whether these stops are points that make sense or what numbers he's using, I have no idea, because I don't know who this person is. I don't know what their method is or all that. But we did a portfolio here where if he executed the stops at the levels that he said, okay, then this portfolio is actually down almost half. Instead of a $63,000 loss, it's a $34,000 loss. And that's just on random. Take your loss at your stop, right? So now, you save $30,000. Now, the fact that there have been winners in here, you would assume that it's been closing out of these winning trades. Now they can go a lot more towards actually making money, right? If you have a stop, I don't care what the level is. I don't care what you're basing it on. Risk management dictates, to take your loss. Okay. And this proves it. Like I said, I don't know if these stops were good places to stop, bad places to stop, what they were based on. But the bottom line is, if he executes them, he saved half his loss here. Okay. And not losing big amounts is the key to this whole thing. This idea of having a high winning percentage is also a horrible one. You study the most successful traders out there, and the vast majority of them, from, Druckenmiller to Soros to whoever, will tell you that their win percentage is not very high, but their winners are very big relative to their losers. We ride our winners. We cut our losers. That's how we make money over time, right? What this person apparently is doing is cutting their winners and riding their losers. They call it, watering the weeds and cutting the roses. And this is bad. And the proof is in the pudding here, how bad this is, right? Look how much money he would have saved if he had just cut his losses. This doesn't even speak to if he had wrote his winners, because we don't know what the winners are. We don't know what he's closed out of on based on this data that this person sent me. But I would be willing to bet that his winners are probably winning more now than they were. Because if they're winners in the last year and a half or whatever that this covers, the market's been going up. So his winners are probably on the long side, and they're probably making more money now than they were when he got out. And these numbers would be vastly different. Same trades, same stocks, same buys and sells. Numbers would be vastly different if he had just cut his losers, wrote his winners, and been disciplined about doing that. I think that's the key. And if you look, every one of these trades that has a bunch of time in it are losing money. Look, all these losers, right, are all things that have been on for like a long period of time, right? Because he's just sitting on the losers, and they just keep getting worse and keep getting worse. So again, the lesson here is risk management. Cut your losses, ride your winners, right? Just on a random portfolio here with random stops and all that. It proves that that's what works. It's not about win rate. And if anybody, by the way, shows off or advertises their high percentage win rate, that's a sign to run, right? It sounds great. Hey, I got a 90% or whatever win rate, but they're lying, because nobody has that. Okay. They only have it if they, are counting only their closed trades. And as this guy does, not counting his open trades, right? It's silly and run from anybody that suggests that that's the way to do it. Okay. So anyway, those are very simple thoughts on a very simple analysis of a very simple portfolio here. But I think they're very valuable thoughts, and they will help you very much to think about those, as you trade and manage your money. Okay. I hope you enjoyed that. Always happy to hear questions and comments. And please check us out at crowdedmarketreport.com and join our free Substack as well, where we send out a bunch of free stuff over the course of the week. All right. Thanks. And we will talk again next week.